welcome to another beautiful week here at Crypto. My God, the numbers are super green. There's all sorts of exciting news. Obviously, a trade deal with China, if we can actually begin to believe that it's real. I mean, we've been hearing so many back and forths, but very exciting times. Anyway, this week, kicking off with Monday, is a veritable trad-splosion. Let's get into it. So first and foremost, so goes Bitcoin, goes the industry, but so goes stables, often goes Bitcoin? I know, there's a lot of metas here to digest, but more stable coins equals less friction into the digital stratosphere where the digital currencies live, our beloved digital currencies. And what we are seeing now, new USDT supply has topped $150 billion according to DeFi Llama. First and foremost, DeFi Llama, love you. Everybody should be using this resource tool. Is one of the reasons I'm here is to educate you, and DeFi Llama educates me. Now that being said, 150 billion US dollars. I mean, let's take those fucking fiats and get them digitized already. This is amazing. The stablecoin growth is probably one of the single greatest indicators of the digitization writ large of finance. This is sort of what crypto is going after, really self-custody and privacy, but the blockchain space as a whole, digitizing finance, well, we got 150 billion of these little boys on our chains, and that's pretty rad. Now, as we move on, Byzantine General, I've quoted him before. I like to lean on him as a resource. However, covering the recent Bitcoin rally, he notes something interesting about BTC right now. It's basically trading at all-time high, but funding and open interest are significantly lower. What does this mean? Is that this is not a leverage move. If we look at Ethereum, we're seeing a lot of shorts being liquidated. This repricing is because of leverage traders experiencing price discovery. With leverage, a long and a short, you have these positions that do get liquidated or wiped. So if I'm going short something and I get liquidated, I have to forcibly buy the asset to repay my position. This is where you get the alternative moves. What Byzantine General is coming out and saying is that this really just looks like we're seeing spot buying. People are just buying Bitcoin. The purest and healthiest way that these markets can move is just to have simple retail go open their phones and buy $20, $100, 20,000, 100,000 worth of these coins. This is good signal. So pretty pumped about that. Now moving on to the explosion of traditional finance. I mean, a lot of this does have a Trumpian overlap, let's not lie. Many of these things are moving in tandem with a lot of Trump's crypto teams, his partners, so on and so forth. But to open up, we see KindlyMD shares skyrocket 600% after merger with Trump crypto advisor David Bailey's Bitcoin investment company. And what's happening here is we see this healthcare company, KindlyMD, merging with Nakamoto, a Bitcoin investment company. Now, as we unpack this, we can see that it was a pipe deal. So the newly formed company has $200 million in convertible debt and $510 million in fresh capital through private investment in public equity deal. We will probably see more of these pipe deals or SPACs as we do find increased capital in traditional finance wanting access to these coins. One of the best ways to do it is this sort of reverse merger, but basically taking the coins into an already publicly traded company, allowing these reserves to be traded on the stock market. So Griffin Digital Mining, a mining venture, merges with American Bitcoin, a Bitcoin accumulation platform focused on building America's Bitcoin backbone. Now, we are seeing a similar thing, right? People with lots of assets, basically funds, are finding ways to become publicly traded. Now, this one a little bit more traditional, but we're seeing trading platform eToro's IPO is said to be oversubscribed. eToro is a classic trading platform that has facilitated cryptocurrencies for a very long time. I want to say they may have even opened pre-2017. I'm not super clear on that, but they've been around as long as I can remember, and it's very nice to see IPO season come back. We do need the digital markets and their pump to be engaged by traditional markets as well. These things just generally trade better on par than they do in these separate chambers. That really keeps crypto as a risk-on asset, and we would like to see this normalize. Again, the slow-moving digitization of all things finance. Of course, we have Amber International unveils a $100 million crypto ecosystem reserve, and Amber International is opening up this massive reserve to assets like BNB, Sol, SWI, XRP, BTC, and ETH. So they are taking a bit broader. They're calling these blue chips, I would say, they're fairly in the blue chip category. Obviously, SWE becoming a first mover in this asset class, and I would like to see more stuff happening on SWE, but if you do follow their CTO, I mean, they're making some interesting stuff in the background, so that's TBD. Now, of course, we have DeFi Development Corp purchases a record 172,000 Solana, surpasses 100 million in treasury holdings. So we're seeing Solana taking that strategy approach, and they also have an accumulation strategy. Now, one thing to note for traditional finance guys, this is a great move. The more assets under management, AUM, that they can stack, the more fees that they can charge. So kind of taking these reserves and making them into a way that the public can buy in, buy out, very good for traditional finance. Not necessarily what we wanted out of this digital crypto ecosystem, but it is a cash cow for the people that know how to play it. And of course, more buy-side appetite does support the industry writ large. So maybe that VC hate that we see right now, traditionally speaking, venture capitalists have been the ones that are going out and hunting that capital and pulling it into the ecosystem. There's been a lot of VC hate as they've inflated the valuations of a lot of these companies, and the exits are really using the user as an exit liquidity versus the ICOs of 2017 that launched at very cheap prices and allowed everybody to rise together. I don't know. Maybe we'll see these TradFi players start to receive the ire of the industry and the venture capital redemption as the pull of exogenous capital into the crypto industry continues to mature. But this is something to focus on. We need the buy side to come from somewhere. Retail is likely going to be squeezed by higher asset prices, the tariff conundrums, of course, the shelves being emptied. We do have a lag on that, even though we just settled with China. There aren't many ships in the ports right now. So anyway, all of this is very positive. And of course, in classic Ethereum mode, staying true to the decentralized ethos, we have this very cool dashboard of the strategic ETH reserve, which is actually pulling information from a variety of resources, the Ethereum Foundation being the top, but we can see whom of these foundations, a lot of these are DAOs, early crypto projects, and where they're holding their ETH reserves. So that's pretty cool. And now the strategic ETH reserve of companies that are maybe aligned to holding ETH long term, active participants being 23, is at 792,000. So we're looking at close to $2 billion worth of ETH. So don't let anyone tell you that this isn't happening on Ethereum. While we see a strategy for Bitcoin, while we see the facsimile for Solana, Ethereum community is handling this themselves on chain. And of course, if you do like this, I would recommend giving its developer, FABDA.ETH, a follow. You will probably get more dashboards, more interesting mechanics. So props to you, Fabda. I really do appreciate this dashboard. It's quite robust, quite badass. And of course, NoSysDAO, just somebody who I've loved for a long time. Very true to the decentralized alignment. So fuck yeah, go decentralization. And it's nice to see Ethereum having a little bit of a comeback victory here. With all that being said, the market's shooting up. This is very exciting. Be careful not to over leverage, not to go too crazy, but it does seem that we are finding our footing, that maybe the pain is truly over and we have some better times to come. All of this is contingent on macro, so fingers crossed that we continue to trade well, that this decentralized World War III doesn't actually pop off into any bigger flare-ups, and that we can actually find a nice pathway forward in the world. With that being said, good luck out there, and I will see you tomorrow.